Tell us, what are you looking for today? What's on your radar?
Well, Walmart had earnings. Obviously, we see if they can continue their recent gains, and then looking for some stability in the FANG stocks. Most importantly, Apple. How far can Apple drop from being a $1 trillion darling to where it is right now? About 20% move just in the last month.
Are you bearish, bullish on Apple?
I think that Apple will find a technical bounce around these levels. If you look back to where Apple rallied from before it became a $1 trillion stock, it was right here at about 185. So I'm bullish on Apple at this point.
All right, and there you hear the opening bell down at the New York Stock Exchange. Stock futures weren't really too moved by a better than expected report we got this morning on retail sales in October, a gain there of 0.8%. That was much better than expected. The Dow Jones Industrial Average out of the gate, it is down about 43 points. But if we have learned anything, Ian, it's that the way the stock market opens is not the way it may close.
Correct.
There's been so much volatility from bell to bell. Do you think we're going to continue to see that?
So when we exited the summer, everything was great. Everything was awesome. Every time I turned on Yahoo Finance, the market was up another 100 points. The exact opposite happened in October. We had the biggest drop in October in 10 years. And what I saw was that the vol indicators, or the indicators that show me extreme panic in the market, were tripped. So 8 of the last 9 times the VVIX has traded above 120, which I see as a key level. The market has staged a 5% rebound in the following 3 months. So I'm focusing on that. There was panic in October. We're very oversold, and I'm very constructive on the market going forward.
So do we get a Santa Claus rally here to end the year?
I think so. I mean, retail sales have been strong. You saw the Walmart numbers today.
Yeah.
People have more money in their pockets than they have in the past because of the tax cuts. So that's going to translate into a good holiday season. Macy's had good earnings, even though the stock was down yesterday. So I see retail sales improving throughout the holidays.
JCPenney, not so much. We're going to go into it a little further in the show. But JCPenney may be its own story.
Sure, they have their own structural problems at JCPenney. I mean, obviously, they haven't really pivoted to e-commerce as well as Macy's or Walmart has. So JCPenney is kind of an outlier in the retail space.
If we rally into the end of the year, who's going to lead that charge? You talked a moment ago that you're keeping your eye on FANGs, especially Apple.
Absolutely, the FANG stocks. The other FANG stock I like is Google. They're going to be launching their Waymo project in December in Arizona, and this is the first commercialized self-driving car project. This is a big deal. People value, or analysts value, Waymo project about $85 billion. Jeffrey says it can be up to $125 billion. This is the start of the self-driving car battle, and it's going to start in December in Arizona.
So you're watching Google and parent company Alphabet as a big leader here. What about the rotation we've been seeing out of tech and into more value stocks? Do you think we're going to continue to see that rotation, and is it a healthy thing?
It really depends on interest rates. I think that if the Fed considers that the global economy is slowing down, and they decide, even yesterday you saw rate hike odds next year come down about 10% in the March meeting and the September meeting. I think if interest rates can kind of be sidelined for a little bit, you'll see the momentum stocks continue to pace the market, the FANG stocks, and not so much the value stocks.
What about bank stocks, interest rate sensitive, the utilities as well? What's your outlook for them in this rate environment?
Sure, bank stocks are all about the 2-year, 10-year spread. Banks borrow in the short end of the curve, lend long end. So as long as the yield curve remains steep and doesn't flatten, there was a little bit of concern there in September because I think the 2-10 spread was down to about 19 basis points. It's up about 30 to 35 basis points right now. As long as that yield curve remains steep, bank profits continue and credit keeps flowing. Before
I let you go, Ian, just your thoughts quickly on GE. We're talking this morning about concern over their bonds going the way of junk. What would the ripple effect be? What are your concerns?
A little bit of concern. I mean, I think the market is kind of braced for this. We've seen this coming with GE for a while now. So the ripple effects throughout the investment grade market won't be as severe as they were if GE caught everybody off guard.
This is not a surprise. Okay. Yeah.